Hey San Diego, welcome back and thanks for joining us as we share what's happening right now in the housing market. Are prices softening? Is it still a seller's market? Hit the subscribe button and let's find out.
All right, let's start by looking at the monthly chart and then we'll check out the long-term trends.
Okay.
So looking at the monthly chart, February to March of this year, we have 16.2% more new listings than we
Still need
did
more than that,
in February. It's easy to get 16% jump when your numbers are this low, but it is improvement. And then 12.5% more pending sales. Closed sales up by 13.8%. Days on market are down 6.5%. And according to the San Diego Association of Realtors, median price is exactly the same as it was in February.
I'm not sure how they run those numbers, but
I don't know. I suppose anything can happen. Maybe rare to have an absolutely flat month, but there it is. So looking at new listings in March, we are basically even with 2023 and way down from 2022. Same with attached housing. And year to date, we're a little ahead of the pace that we were on in 2023, but again, nothing like 2022. Oh, how we wish we could go back to 2022 and have all these new listings. Yep. So looking at the long-term chart, we say it every month, everything is very much uniform in terms of the ups and the downs until we get here to 2020. And actually things start to look relatively regular again, although then we get here to 2022. Hello, Bella.
Bella was yelling at me, so I picked her up.
Oh, all right.
Sorry.
Yeah, that's all right.
That was a bit of a distraction. Go ahead, continue.
So then, looking at 2022 to 23, we just have lost so much in terms of new listings. And, it's all about rates, really. I really believe it's all about rates. So that's, what's happening with new listings. We're seeing more, although so far not, it's not what we really consider the spring surge.
Right. We were hoping for a spring surge, and so far we've gotten a spring trickle.
Yeah, a little trickle. Now, closed sales, we're at an all-time low as we started 2023. So those have been definitely recovering from the 30-year low that we saw at the end of 2023. And again, that's a function of not enough or fewer listings.
People aren't putting their houses on the market because rates are so high and they don't want to trade their old low rate for a new high rate.
Correct. Yes. So again, closed sales way down from 22 to 23, and then down again 23 to 24 in terms of March. So we're recovering, but not back yet. And again, you can see the seasonal fluctuation in closed sales historically, and then it just kind of falls off a cliff here in the middle of 2022. So we need more new listings to create more closed sales. And as long as we have the low number of new listings that we're currently looking at and have been looking at, this seller's market is going to continue. It's going to be challenging for buyers. And that's going to just keep on keeping on until the rate situation changes.
Yes, all eyes on interest rates.
Absolutely. So now median sale price, because of all the things that we were previously talking about, is up. 2023, we were at $937, and here we are at $1,050,000 for a detached home in San Diego County, median price March 2024.
Not a lot of people can afford that.
No, it's a big number.
However, there are more than you'd think, given all the multiple offers and bidding wars we have on the homes that are available.
Yeah, we're seeing definitely multiple offers, definitely overbidding going on. However, in most zip codes that I'm looking at, if you go back to 2022 when we were having the frenzied overbidding back then, the list to sale price ratio was up around 110% in most zip codes. And right now it's riding at like 101, 102. So people are overbidding, but they're not overbidding like crazy like they were back then. So it's still hot, but it's been a lot hotter in the past. So again, median sale price up, up, up. And as long as we keep having this low number of new listings and pending sales keeping pace, we're going to see this median price firm and or increasing, although it was fairly flat from February to March. A lot of people were predicting that 2024 was going to be a repeat of 2022, and we were going to see a 15% rise in the first 90 days. And we got about 6.5% jump from January to now, but now it's leveled out. So that is actually something for sellers to really think about, because if you're thinking you're going to wait till later this year and get more, I mean, it's the exuberance is still there, but it's not what it was in 2022, and it may peter out.
All right, well, shall we talk about interest rates now?
If we have to.
Okay.
Okay, so looking at the Freddie Mac primary mortgage market survey last week, the average was 6.88%, which is slightly up from the week before and slightly up from the week before that. We've been hovering in the high sixes most of the year here, and the jobs reports continue to be better than expected, and the CPI reports continue to be a little bit hotter than we'd like to see.
Stubbornly persistent inflation.
Yes, stubbornly persistent inflation is now making it look like these, rate cuts that were forecast, not promised, but forecast, months ago, are now going to be pushed out a few more months. So we're likely to see rates right around this level for the next few months, unless anything really serious changes in the bond market or with jobs and inflation.
Okay. Well, are we good for now?
That's what's happening in San Diego County real estate right now.
All right. Well, thanks for joining us. We hope you enjoyed this video. If you did, please like, share, and subscribe, and we'll see you next time.
See you later, folks.